Hey everyone, and welcome to another deep dive. You wanted the lowdown on Ramco Cements' second quarter results for fiscal year 25, and, well, here we are. Hot off the presses from November 11th, no less. We've got the company's press release and investor update right here, so we're going straight to the source.
Yeah, it's great to see what companies are saying about their own performance, especially in a market like cement.
Right. It can be pretty volatile.
Yeah.
Okay, so big picture first. Their revenue is down 10% year over year, and that's for both the standalone and the consolidated results. And their profits took a big hit too. Profit after tax is down a huge 66% standalone and 67% consolidated. I don't think those are the kind of numbers investors want to see.
No, not really. But, the cement industry is really tied to how the overall economy is performing.
Yeah, of course. You can't really look at Ramco in isolation.
Right.
So let's get into the specifics. Sales and production capacity first. Cement sales dipped a little bit, down 1% for the half year and 3% for the quarter year over year. But get this, their capacity utilization is actually up slightly for the half year.
And their sales volume actually went up 3% if you compare this quarter to the last quarter. Plus, they've increased their production capacity by using debottlenecking.
Debottlenecking, what is that?
It's basically a way to improve efficiency in their production process, like clearing a traffic jam in the factory.
Oh, okay, so more cement, less hassle. And it's not just cement. They've also got their building products segment, which seems to be doing well.
Yeah, it is. They're diversifying.
Smart move. But we need to zoom out and look at the overall market to see what's affecting Ramco's results, right?
Right. Well, the Reserve Bank of India is predicting that the country's GDP will grow a solid 7.2%. And the government is putting a lot of money into infrastructure. All good news for the construction industry, which of course means good news for cement demand.
Sounds like it should be booming.
Yeah, but it's not quite that simple. Cement prices have been weak across all regions.
Oh.
And we can't forget about those crazy heat waves and the monsoon season, which can really impact construction.
Yeah, not ideal conditions. So everyone listening out there, if you're in construction or any related field, these are the market trends you need to be paying attention to.
Yeah, they can have a huge impact on your projects.
Okay, so we know revenue is down, but what about costs?
Ah, that's where things get interesting. Ramco's been finding ways to manage expenses.
Ooh, cost-cutting strategies. Tell me more.
Well, for one thing, raw materials. They've been dealing with inflation like everyone else, especially for things like fly ash, slag, and gypsum. But on the plus side, diesel prices are down, which helps with transportation costs.
Okay, so up and down on materials. But I imagine moving all that cement around isn't cheap. What about logistics?
They're getting really smart about their logistics. They're using more rail transport, which is cheaper. And they've managed to reduce the distance the cement has to travel on average to reach customers.
Less time on the road, less money spent. Nice. What about energy?
This is a big win for them. They've reduced their power and fuel costs per ton of cement significantly by using more wind energy and waste heat recovery systems, or WHRS.
Waste heat recovery, that sounds cool. What is that?
So basically, they're taking the heat generated during cement production and using it to generate electricity.
Wow. So they're going green A&D, saving money.
Yep.
That's impressive. What about employee costs?
They've managed those well, too, thanks to something called operating leverage.
Operating leverage.
Basically, it means spreading your fixed costs over a larger volume of production. The more cement they produce, the lower the cost per ton for things like wages.
Oh, I get it. And other expenses, like administrative costs.
Same thing. Better cost absorption because of operating leverage.
Wow, so they're really doing everything they can to control expenses. But even with all that, their EBITDA margin is still down year over year.
True, but their margin is still better than a lot of their competitors.
Okay, so they're doing better than some. What about their overall financial health? Are they at risk?
I don't think so. Their debt-to-equity ratio is stable, and they've been selling off assets that aren't core to their business to raise cash. They're aiming to get 1,000 crores from those sales, and they're already at 376 crores.
Smart move. So they're staying lean and mean. But what about growth? Are they just hunkering down, or do they have any plans for the future?
Oh, they've got big plans. They want to increase their cement capacity to 30 MTPA by March 2026, and they've got projects in progress to make that happen.
30 MTPA, that's huge.
It is.
So they must be pretty confident about the future. What else are they doing to get ready for all that growth?
Well, they just started up an 18 milliW thermal power plant in Kolimigundla and have plans for more WHRS plants. And they're expanding their building products capacity, too.
Wow, they're not messing around.
Yeah.
But what about the environment? Are they just polluting the planet to make all this cement?
Actually, They're doing a lot to be sustainable. Their CO2 emissions are low, they're water positive, and they're using a lot of green energy, like 39% of their energy is renewable, and they want to increase that.
Really? That's amazing. And to top it off, they've been racking up awards left and right.
Yeah, they have. Just in this quarter, they've received awards for things like safety, energy efficiency, quality, and innovation. It shows they're not just focused on profit. They're trying to be the best in all areas.
That's fantastic. Okay, so we know revenue is down, but operating expenses are also down. How is all of that playing out in terms of their overall profitability?
Good question. Let's dig into that a bit more.
So starting with revenue, it's down 10% year over year for both standalone and consolidated results. What are the main reasons for that?
Well, like we mentioned before, cement prices have been weaker.
Right.
So even if they sell the same amount of cement, if they're getting less money for it, their revenue will be lower.
Makes sense.
And on top of that, there have been challenges with demand, too. Those heat waves and the monsoons slowed down construction, so there was less need for cement.
So it's like a double whammy, lower prices and less demand?
Yep. But remember, their building products segment is actually growing. Sales are up 10% year over year.
Well, that's good news.
Yeah. It shows they're diversifying well.
Absolutely. Now, on the cost side, operating expenses are down 9% year over year. That's pretty impressive. How are they doing that?
Well, their logistics management is definitely helping. Using more rail transport and shortening those delivery distances is saving them money.
Yeah, those trains are much more efficient.
Exactly. And their focus on green energy, like wind power and those waste heat recovery systems, is really paying off.
It's like they're getting free energy. What about employee costs and other expenses?
Well, operating leverage is helping them there, too.
Right, the more cement they make, the lower the cost per ton for those fixed expenses. It's like a giant cement cake.
Exactly.
So they're doing a great job controlling costs. But even with all that, their EBITDA margin is down year over year. Why is that?
Those lower cement prices are just really hard to overcome, even with all the cost cutting. It's putting pressure on their margins, no matter how efficiently they run their business.
So it's a constant battle.
It is. But it's important to remember they're still doing better than many of their competitors in terms of EBITDA margin.
Okay, so they're holding their own. Now, what about their debt and investments? They're spending a lot on expanding, but they're also trying to manage their debt.
It's a balancing act, for sure. They're trying to grow while also keeping your debt under control.
It sounds tricky. So first, the expansion. They want to boost capacity to 30 MTTA by March 2026. That's a big goal.
It is. And they've budgeted 1,200 crores for these projects just in this fiscal year.
Wow, they're serious about this. But how are they paying for it all?
A mix of internal accruals, debt financing, and by selling off assets they don't need.
Internal accruals, I get that. That's their profits. But debt financing, isn't that risky?
It can be, which is why their borrowing strategy is so important. They're being careful to keep their debt-to-equity ratio at a healthy level. It's like making sure you don't borrow more than you can repay.
Okay, so how much debt do they actually have?
As of September 30th, their gross debt was 5,203.72 crores. But that's not the whole story. We need to look at their net debt, which factors in their cash on hand.
Right, like how much money you have after you've paid your bills. So what's their net debt?
5,103.46 crores.
That's still a lot. Are there any concerns about that?
I don't think so. For one thing, their debt-to-equity ratio is healthy. They've also gotten good credit ratings from agencies like ICRA and CRISIL, which means lenders trust them. And they're actively selling off those non-core assets to further reduce their debt.
So the credit rating agencies are like their financial report card, and they're getting good grades. That's good. Okay, so tell me more about their borrowing strategy.
Well, they've got a good chunk of long-term debt, 4,773.93 crores to be exact.
Okay.
This gives them stability, and they've locked in some good interest rates.
So they're playing the long game.
Yes, exactly. But they also use short-term debt, which comes to 359.03 crores. It's good for managing cash flow, but it's usually a bit more expensive, like using a credit card.
Got it. So they're using both long-term and short-term debt, and they're supplementing that with those non-core asset sales, right?
Exactly. They're selling off things they don't need to help reduce their debt and fund those expansion plans. They recently made a deal to sell some land for 74 crores, which will be finalized next quarter.
So they're streamlining their business. Now, those credit ratings you mentioned, those are important for getting good interest rates, right?
Absolutely. ICRA gave them an AAA plus rating for their long-term debt and an A1 plus rating for their short-term debt and NCDs. CRISIL also gave their short-term debt an A1 plus rating.
So what does all that mean in plain English?
Basically, it means that Ramco is very likely to repay its debts on time. Those ratings are like a gold star, showing that they're a low-risk borrower.
So they're good at managing their money. That's good to know. Now let's look more closely at their income statement. What about their EBITDA?
EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It basically tells us how much money they're making from their core business activities.
Okay, so what's their EBITDA looking like?
In the first half of FY25, their standalone EBITDA was 651.31 crores, and their consolidated EBITDA was 652.16 crores.
How does that compare to last year?
Well, it's actually down year over year. In the first half of FY24, their standalone EBITDA was 761.43 crores, and their consolidated EBITDA was 767.85 crores.
So even though they're cutting costs, their EBITDA has taken a hit.
Yeah, mainly because of those lower cement prices. It's squeezing their margins.
Okay, so those lower prices are a real problem. But how does their EBITDA margin compare to their competitors? Are they doing better or worse?
They're actually doing quite well. Their EBITDA margin for the first half of FY25 is 16%, which is higher than some of their competitors.
So they're more profitable than some of their rivals, even with the challenges they're facing? That's good news. Now, what about their profit before tax?
Profit before tax, or PBT, shows us their earnings after all operating expenses are taken out, but before taxes are calculated.
So what's their PBT?
For the first half of FY25, their standalone PBT was 83.13 crores, and their consolidated PBT was 82.03 crores.
And I'm guessing those numbers are down compared to last year, too.
You guessed right. In the first half of FY24, their standalone PBT was 246.23 crores, and their consolidated PBT was 245.48 crores.
Okay, so those lower cement prices are really affecting their bottom line.
Yeah, they're definitely having an impact.
All right, so let's talk about the final number, profit after tax, or P8. This is the money that goes to shareholders, right?
Exactly. It's the profit left over after all expenses and taxes are paid.
Okay, so what's their P8?
For the first half of FY25, their standalone PT was 61.08 crores, and their consolidated PT was 60.06 crores.
And I'm assuming those numbers are also down compared to last year?
Yes, they are. In the first half of FY24, their standalone PT was 180.21 crores, and their consolidated PT was 179.49 crores.
So those lower cement prices are really hurting their profitability, but they're still investing in growth and seem to be managing their debt well. What's your overall take on their financial situation?
It's a mixed bag, for sure. They're facing some tough challenges, but they're also taking steps to overcome them. Their cost-cutting measures, expansion plans, and debt management strategy all suggest that they're determined to succeed.
It definitely sounds like they're not giving up. They're actively shaping their future and adapting to a constantly changing market.
Exactly.
Well, we've covered a lot of ground already. We've talked about revenue, costs, EBITDA, PBT, PAT, debt, and expansion plans. Ramco is facing a challenging market, but they're also doing some really impressive things.
Definitely.
Now, let's dig a bit deeper into their sustainability efforts. We touched on them briefly before, but I think their commitment to going green deserves a closer look.
Absolutely. Let's explore just how green Ramco really is. They're way beyond just checking boxes. Their CO2 emissions are much lower than the industry average.
That's great. So they're really making progress on reducing their carbon footprint. How are they doing that?
It's a few things. They've got energy efficiency measures all over their operations.
Okay.
They're also using alternative fuels.
Right.
And, of course, they're using a lot more renewable energy.
So it's a multi-pronged attack. What about water usage? You mentioned before that they're water positive. What does that mean? I mean, they use a lot of water to make cement, right?
It means they're actually giving back more water than they use.
Wow, how is that even possible?
They're doing a bunch of things like harvesting rainwater,
Makes sense.
recycling water,
Smart.
and just generally using water-efficient technologies.
So it's not just about minimizing their impact, they're actually adding water back into the system.
Exactly.
That's incredible. Okay, let's talk about that 39% green energy usage. Which renewables are they using?
Well, wind power is a big one. They've been investing in wind farms.
Oh, cool.
They're also using those waste heat recovery systems, those WHRS we talked about earlier.
Right, the ones that capture heat from the cement making process and turn it into electricity. That's so clever.
It is. And they have plans to increase their renewable energy usage even more in the future.
It's inspiring to see a company so committed to sustainability. But green initiatives can be pretty expensive. How are they balancing those investments with their need to be profitable?
They seem to understand that sustainability is good for the bottom line, too. It's not just about doing good, it's good business.
Right, it's not just about saving the planet. It's about building a sustainable business that can thrive for years to come.
Exactly.
So how is that working out for them?
Well, for one thing, they're actually saving money. Those energy efficiency measures and renewable energy sources are reducing their power and fuel bills.
So they're cutting costs A&D emissions.
Yep, a win-win. And beyond the cost savings, their sustainability efforts are good for their brand image. It attracts investors who care about ESG factors.
Right. Consumers and investors want to support companies that align with their values. Ramco's positioning themselves as a leader in sustainability.
Exactly. And it's not just talk. They're backing it up with real action. Their low emissions, water positivity, and use of green energy really set them apart.
Plus, they've won a bunch of awards for their sustainability efforts, which is awesome. It shows they're not just doing it for the PR.
Right. They're really committed to making a difference.
Okay, so zooming out for a second, we've talked about cost management, growth, and sustainability. What's the big picture here? What's Ramco's overall strategy?
I think they're trying to build a company that's resilient, a company that can thrive no matter what the future holds. They're focused on being efficient, growing strategically, and being deeply sustainable.
So they're not just reacting to the market, they're shaping their own future.
Exactly.
Now, bringing it back to our listener, why should they care about all this?
Remco's showing that companies can be both financially successful and environmentally responsible, even in a tough industry like cement.
They're proving that you don't have to choose between profits and the planet.
Right. And they're setting a good example for other businesses.
Okay, let's dive back into those financials. We know their revenue is down, but their expenses are lower too. How is all of that affecting their bottom line?
Let's start with EBITDA. Remember, that's earnings before interest, taxes, depreciation, and amortization. It basically tells us how profitable their operations are.
Okay, remind me again what EBITDA is exactly. Sometimes those acronyms all blur together.
So EBITDA is their earnings from their core business before we take into account things like financing costs and other non-operating expenses.
All right, so it's like looking at the core of their business without all the financial distraction.
Exactly. In the first half of FY25, their standalone EBITDA was 651.31 crores, and their consolidated EBITDA was 652.16 crores.
Okay, so those are solid numbers, but how do they compare to last year?
Well, unfortunately, their EBITDA is down compared to the same time last year. In the first half of FY24, their standalone EBITDA was 761.43 crores, and their consolidated EBITDA was 767.85 crores.
So even though they're managing costs well, their EBITDA is still lower. Why is that?
Mostly because of those lower cement prices. Even though they're cutting costs, those lower prices are eating into their profits.
It's tough to fight against those market forces, but how does their EBITDA margin compare to their competitors? Are they in a good position?
They're actually doing pretty well. Their EBITDA margin is still strong compared to others in the cement industry.
So they're outperforming some of their rivals? That's great.
Yep. Their EBITDA margin for the first half of FY25 is 16%.
That's impressive considering the challenges they're facing. Okay, so moving on, what about their profit before tax?
Profit before tax, or PBT, gives us a picture of their earnings after all their operating expenses are accounted for, but before we take out taxes.
Got it. So how's their PBT looking?
For the first half of FY25, their standalone PBT was 83.13 crores, and their consolidated PBT was 82.03 crores.
Those numbers are positive, but I'm guessing they're lower than last year too, right?
You got it. In the first half of FY24, their standalone PBT was 246.23 crores, and consolidated PBT was 245.48 crores.
Wow, that's a big drop. It seems like those lower cement prices are really having a ripple effect on their whole financial picture.
Yeah, it's tough to completely escape the impact of those lower prices.
Okay, so let's move to the final number, profit after tax, or PIT. This is the money that goes to shareholders after all the bills are paid.
Exactly.
So how much do they actually make?
In the first half of FY25, their standalone PT was 61.08 crores, and their consolidated PT was 60.06 crores.
And I'm guessing these numbers are down compared to last year as well.
Yep. In the first half of FY24, their standalone PT was 180.21 crores, and their consolidated PT was 179.49 crores.
Those are pretty significant declines. It's clear that the lower cement prices are really taking a toll on their profitability, but they're still investing in growth and seem to be managing their debt well. What's your overall take on their financial health?
It's a mixed bag, but I think they're in a good position overall. They're dealing with challenges, but they're taking proactive steps to overcome them. They're cost-cutting, their expansion plans, and their debt management all point to a company that's determined to weather this storm.
It definitely sounds like they're not backing down. They're taking control and shaping their own future,
Right.
which is impressive.
Absolutely.
Okay, so let's switch gears a bit and talk about their commitment to technology and innovation. They've received some awards in this area, right?
They have. Their corporate tech team actually won a CIO award for their approach to cybersecurity.
Cybersecurity for a cement company?
Yeah, it might seem surprising, but in today's world, every company needs to be thinking about cybersecurity. Data breaches and attacks can happen to anyone.
That's true. So what did they do that was so special?
They implemented something called Zero Trust Network Access.
Okay, what is that? I'm not a tech expert, so you'll have to explain it to me like I'm 5.
Basically, it means that they don't trust any user or device by default. Everyone and everything has to be verified before it can access the network.
So it's like having a super strict security guard at the entrance.
Exactly. It's a lot more secure than traditional security models.
Okay, so Ramco is on the cutting edge of cybersecurity. That's good to know. But they're also doing other cool things with technology, right?
Yeah, they're investing in research and development. They want to create new products and processes that make them more efficient and sustainable.
So they're not just sitting back and letting the world pass them by.
Definitely not. They're pushing the boundaries and exploring new possibilities.
It's exciting to see that. Okay, so we've talked about their sustainability efforts and their tech advancements, but they've also won awards for quality and safety, right?
They have. They're really focused on meeting high-quality standards and making sure their employees have a safe and healthy work environment.
It's one thing to talk about safety and quality, but it's another thing entirely to actually do it day in and day out.
Exactly. And it's clear that Ramco is walking the walk. They've got rigorous quality control processes, and they've invested heavily in training and safety programs for their employees.
That kind of commitment definitely pays off in the long run.
Absolutely.
So we've talked about their commitment to sustainability, technology, quality, and safety. What's the common thread running through all these areas?
I think it comes down to a commitment to excellence. They want to be the best at everything they do. They're willing to invest in people, processes, and technology to get there.
It's an inspiring approach. It's clear they're not just a cement company. They're a company that's setting new standards for the whole industry.
I agree. Now let's take a look at their marketing and branding. How are they getting their message out there and differentiating themselves in the market?
Okay, let's talk about how they're marketing themselves. What are they doing to stand out?
They're being very strategic. They're trying to create a strong brand that resonates with their target customers.
So how are they positioning themselves? What makes them unique?
They're really emphasizing their commitment to quality, sustainability, and innovation.
Okay.
They're also highlighting their track record of delivering high-performance products.
Right.
And they're focusing on building long-term relationships with their customers.
So it's not just about selling cement, it's about building trust and partnerships.
Exactly. They want to work with customers who share their values.
And how are they getting this message across? What kind of marketing are they doing?
A mix of everything: print ads, TV commercials, social media, and content marketing.
So they're reaching their audience wherever they are.
Yep. And they're tailoring their message for each platform, making sure it's consistent and impactful.
That's important for building a strong brand. Do you have any examples of their marketing campaigns?
One that comes to mind focused on their commitment to sustainable construction. They talked about using green building materials and reducing their environmental impact.
That's a great way to connect with customers who care about the environment. It shows that they're not just talking the talk, they're walking the walk.
Exactly. It positions them as a leader in the industry.
It sounds like they're doing a really good job with their marketing. Okay, let's talk about their competition. Who are they up against?
The Indian cement market is pretty crowded, with a lot of big and small players. Some of the major ones are Ultratech Cement, Ambuja Cements, ACC Limited, and Dalmia Farad.
So Ramco's got some tough competition. How do they differentiate themselves in that kind of environment?
They're focusing on a few key things: sustainability, technology, and a customer-centric approach.
We've already talked about their commitment to sustainability and their use of technology. What do you mean by customer-centric?
They've got a reputation for great customer service. They're responsive, they go the extra mile, and they really try to make their customers happy.
So it's all about building relationships.
Exactly.
Now, what about market share? How does Ramco compare to the other big players?
They're not the biggest, but they have a respectable market share, and they've been growing steadily in recent years.
So they're a significant player in the market. What about pricing? How do their prices compare to their competitors?
Cement pricing is very competitive in India. Prices go up and down depending on all sorts of things like demand, supply, and other market factors.
So it's a tough market to be in.
It is. But Ramco has managed to maintain a good profit margin, even with the price pressures.
How are they doing that?
They're really focused on being efficient and managing their costs effectively.
So it's not just about cutting prices to compete, it's about running a tight ship. What about distribution? How do they get their cement to their customers?
They have a strong distribution network with a wide reach across India. They use their own fleet of trucks, and they also work with third-party logistics providers.
So they're making sure their cement gets to the right place at the right time.
Yep. And that's a key advantage in such a competitive market.
So to sum it up, Ramco's facing some tough competition, but they're doing a lot of things right. They're focused on sustainability, technology, customer service, and efficiency. That's a winning combination. Now, looking ahead, what are some of the key trends and challenges that could impact Ramco's performance in the future?
There are a few things to watch for. Infrastructure spending, government policies, technological advancements, and environmental regulations could all have a big impact on the cement industry.
Okay, let's break those down one by one. Starting with infrastructure spending. How could changes in government spending on infrastructure affect Ramco?
Well, infrastructure spending drives demand for cement. So if the government spends more on infrastructure, that's good news for Ramco.
Right, more infrastructure means more construction, which means more cement.
Exactly. It would boost their sales and revenue.
Yeah,
But if the government cuts back on infrastructure spending, that would hurt their business.
because there would be less demand for cement.
Yeah.
Okay, so it's important for Ramco to keep an eye on those government policies and spending decisions.
Absolutely. It can have a huge impact on their business.
Now, what about other government policies? What else could affect Ramco's operations?
Things like environmental regulations and carbon emissions policies could have a big impact on the cement industry. Cement production uses a lot of energy and produces a lot of CO2.
So stricter regulations could increase Ramco's costs.
They could, but they could also be an opportunity for Ramco to show that they're committed to sustainability. It could help them stand out from competitors who aren't as environmentally focused.
So it's a challenge and an opportunity both at the same time.
Exactly. And Ramco seems to be ahead of the curve on this. They're already investing in green technologies and reducing their emissions.
That's good to know. Okay, what about technology? What are some of the trends that could affect the cement industry?
One big trend is the adoption of digital technologies, things like artificial intelligence, the Internet of Things, and big data analytics.
Okay, how would those be used in the cement industry?
In lots of ways. They can help to optimize production, make things more efficient, reduce waste, improve safety, and even personalize customer experiences.
Wow, it sounds like technology can really transform the industry.
It can. And Ramco is already using some of these technologies like their cybersecurity system. It shows they're committed to innovation.
That's exciting to see. Now, last but not least, what about environmental regulations? How could those impact Ramco?
Governments around the world are getting more serious about climate change, and they're putting stricter regulations in place to reduce carbon emissions and promote sustainable practices.
Right, and the cement industry is a big emitter of CO2, so those regulations could really affect them.
They could, but it's also a chance for Ramco to really stand out. They're already leading the way in sustainability, so they could benefit from those regulations.
So they could turn a challenge into an opportunity.
Exactly.
So it sounds like the future of the cement industry will be shaped by a lot of different factors.
It will.
But companies like Ramco, who are focused on innovation, sustainability, and customer service, will be in a good position to succeed.
Definitely. They're the ones to watch.
Okay, we've covered a lot of ground in this deep dive. We've explored Ramco's financials, their sustainability efforts, their technology, their competitive landscape, and the future of the cement industry.
It's been a great discussion. Ramco is a fascinating company.
Absolutely. But before we wrap up, I have one more question for you. What's your overall impression of Ramco Cements? Would you say they're a good investment?
That's a tough one to answer definitively. Every investment has risks and rewards.
Of course. But based on what we've seen today, what do you think?
I'm impressed by their commitment to sustainability, their focus on innovation, and their strong financial performance.
They seem to be doing a lot of things right.
They are. But it's important to remember that the cement industry is cyclical. Things can change quickly.
So investors need to do their own research and understand the risks involved.
Absolutely. But overall, I think Ramco is a company with a bright future. They're well-managed, innovative, and committed to creating value.
That's a great note to end on. Thank you so much for sharing your expertise with us today. It's been a pleasure having you on the show.
The pleasure was all mine. I always enjoy these deep dives. It's fascinating to see how companies are navigating today's complex world.
Okay, now let's move on to the final part of our show. We'll summarize our key takeaways and leave our listeners with something to think about. All right, let's do a quick recap of what we learned about Ramco Cements. Cement prices are down and demand's a bit shaky, but they're taking action. They're managing costs, investing in growth, and they're really focused on sustainability.
Definitely proactive.
So let's break those key takeaways down a bit. Cost management first. They've come up with some clever ways to reduce those operating expenses.
Yeah, switching to rail transport and using more green energy are great examples. Not only are they saving money, but they're also being more environmentally responsible.
Exactly, a win-win situation. Now, about growth, they're clearly not afraid to invest in the future. Those expansion plans are ambitious.
Those investments show they're confident about the cement industry's future. They're thinking long-term.
It's like planting seeds for a future harvest, right? Now, let's talk about sustainability. This is where Ramco really stands out.
Absolutely. Those low CO2 emissions, the water positivity, their use of renewable energy,
Yeah.
it all shows a real commitment to sustainability.
It's not just greenwashing. They're taking concrete steps to reduce their impact.
They really are. And it's not just about doing the right thing, it makes good business sense too.
Right. Investors and customers are taking notice. Now, technology and innovation, they're not afraid of new tech, are they?
Nope. They're using it to improve their operations and stay competitive. That award-winning cybersecurity system is a great example.
They're not just keeping up, they're pushing boundaries. Okay, what about their competition? They're in a tough market.
Yeah, lots of competition. But they're setting themselves apart with their focus on sustainability, technology, and customer service. They're not just trying to be the biggest, they're aiming to be the best.
And their financial performance shows that their strategy is working, even with all the challenges. Now, looking ahead, what should we be watching for with Ramco Cements?
Keep an eye on how they execute those expansion plans, how they continue to reduce their environmental impact, and how they use technology to improve their operations and their customer experience.
Great points. So for everyone listening, if you're interested in the cement industry or if you're looking for a company that's doing innovative things, Ramco Cements is definitely worth keeping an eye on.
Absolutely.
Yeah.
They're a company with a lot of potential, they're well-managed, they're innovative, and they're focused on creating value. A good example for any business.
Well said. We've covered a lot of ground today, and I hope this deep dive has given you a better understanding of Ramco Cements, their performance, and their vision for the future.
It's been a pleasure joining you.
And thank you for joining us on this deep dive. Remember, the business world is full of fascinating stories. So stay curious, keep exploring, and never stop diving deep. We'll be back soon with more deep dives into the companies and industries that shape our world. Until next time.